Today, we're taking a look at some of the most common investing mistakes that people make in their 20s. Who knows, you might be making some of these mistakes yourself. I know my biggest mistake was not investing at all. But here's the good news, you can easily avoid making some of these mistakes. Here's how.
I think there's so many investment mistakes that you can make as a young adult investing for the first time, but to me, one of the biggest one that you could make is mistaking luck for investment skill. So what typically happens is that young investors, they might be in university or they might have just started working, they get fascinated in the financial market. It could be stocks, it could be trading, it could be even cryptocurrency, and then they put a little bit of money into the investment trade and they make a profit. And they think because they make a profit that they have some form of skill or some edge in the market that allows them to be a good investor, where in actual fact it's just pure luck, because sometimes markets go up, sometimes markets go down. And it's a mistake, because if you think you are actually better than the market or you have better investment skill than the market, then it might lead you to take more risk in the future. And then when you take more risk in the future, that's where bigger losses may be sustained.
Okay, but the thing is, Tim, when you are doing anything in your 20s, investing or otherwise, we tend to be quite gung-ho about it, right? We're very enthusiastic, especially when we see that first return in our bank account. And then we may fall into that trap of, making a mistake after the fact. How do we navigate this behavioral complex?
I think it's absolutely natural for younger investors to be more aggressive investors because they're more bullish of being able to make higher returns. And to a certain extent, they are right, because you're young, you're able to take higher risks in your investment. So I think it's natural, I think it makes sense. But I think the only advice I'll give is that just because you are young, doesn't mean it's okay to just simply invest in anything that you want, thinking you will make high returns without fully understanding what is it that you are investing in or calculating the risk involved. You should never be investing in something you don't understand. So I think there is no shortcut to gaining knowledge in investing, right? So if you are interested in, let's say, buying shares or stocks or even ETFs, it's good to understand what those ETFs represent, how those exchange traded fund works, how do companies derive their earnings. After you've done your homework, that's where it makes sense to, take a little bit of a dip into the water, put a little bit of money in, not too much, because the presumption needs to be that you might make mistakes and you don't want to lose too much. But it's good to invest a little bit just so you can get your feet a little bit wet, and that also gives you a bit of encouragement to learn more about the investment market. And what I think is that as you become more knowledgeable in the market, that's where you can then invest in other instruments, but never invest in something you don't understand, or invest in something just because you see your friends doing it.
So you talked about getting your feet wet, having a little dip in the water, if you will. But there's another camp of investors, or I would even call them non-investors, people who are just deathly afraid of even going near the pool of water, people who don't even invest at all. And that's what I did in my 20s. I didn't invest. What would you say to them then?
I think the best way to think about investing is that it's a life skill. So it's just like learning to swim, learning to cycle, learning to cook, right? If you have that skill, it's good for you. But as with learning any life skill, it takes time to become good in it, right? So if you are learning to swim for the first time, you need to start learning to swim in a shallow pool where you can't possibly drown. And it's only when you become more proficient, more experienced, that you take a dip into the deeper end of the pool and to make those investments.
Okay, so I like that analogy, the swimming pool with various depths of investing, if you will. What happens if we drown or get burned? What's the lesson there?
I think one of the things I see quite often is that when people have a bad first experience with investing, so this could be because they lost a few $1,000s when they were young, investing in a single stock that someone told them to invest, it kind of gives them that phobia to invest in the future, which is also a little bit discouraging, because it discourages them from investing because they could otherwise be a good investor. So I think the best way to think about it is really always to start small. Start small, start with money that you can afford to lose. Because even if you were to lose those, a few $100s or even a few $1,000s, you can learn a good lesson when it comes to investing, and then you can recover from your mistake. I also like to think of investing as a long marathon, right? We're not looking to make quick profits because we're not trying to make trades to get quick returns, but rather we want to build our wealth over 10, 20, maybe even 30 years. And I think inevitably the markets will go up and down. And just because you invest in the wrong timing doesn't mean that is a bad investment. It could just mean that you need a longer period of time to ride up the ups and downs of the markets.
So Tim, what was your personal investment mistake that you made in your 20s and how did you recover from it?
I wouldn't say I make a huge investment mistake, but one of the things I kind of regretted not doing is really to invest in the overseas market when I first started investing.
Right.
Back then, you're talking about like maybe 15 years ago, it was not so easy to really access overseas market through Singapore. Back then, brokers it was quite expensive if you want to invest in the US markets, and the investment solutions that we have today, for example, your low-cost ETFs, your robo-advisors, those were not present back then. But had they been present, I definitely would have wished that I invested in a more globally diversified portfolio from day one.
What are some other investment mistakes that are pretty common among young adults?
I think the other investment mistakes that young investors may make is really not looking into costs.
Right.
So things like your transaction fee, your management costs, or even hidden costs can really eat into your returns, especially over a long time period. So I think we have to be very mindful about the cost we're paying for any investment that we make.
What is that one piece of advice to young adults that you would give regarding investment?
I think the best advice I can give to young investors is to really start early, because when you are young and you are a young investor and you start young, you really have a long investment time horizon. That gives you the advantages because that means you can ride out multiple market highs and lows, because the markets typically move in a cycle. So because you have 30 to 40 years before you retire, you have like decades to actually ride up the ups and downs of the markets. The second thing I would say is that when you start investing early, you tend to make smaller mistakes, maybe because you don't have that much savings anyway, and those can be good lessons to make you a better investor in the long run.